it's very easy to like lose money using Ethereum. You can lose it to hacks and other things. And so my advice would be to do your own research and look into alternative ways to submit your transactions to get better results. And if everybody on Ethereum did this, or everybody on Ethereum, used all of the options that are at their disposal, we would be seeing a lot less money going into the pockets of kind of harmful MEV bot operators.
Hello, everybody. My name is Ben, and I will be your host for today's podcast. Today, I have a very special guest. His name is Caleb Sheridan. So now Caleb is actually a core developer of the Eden Network. And there's a lot of interesting topics that we're going to cover today, particularly on the future of ETH, especially ETH 2.0, and how Eden Network actually plays a huge role in that. Caleb actually first got into crypto through a career at PokerStars, which is quite interesting, where he led the economic incentive design in extremely competitive environments. And now he's actually tackling one of the crypto's most competitive environments, which is actually miner extractable value, otherwise known as MEV. For all you out there who hear this term, you normally hear this term quite often. It can be quite confusing, and that's why we have Caleb today to kind of shed light on this area and how it's actually very important for the network as a whole. So welcome to the podcast, Caleb.
And thank you very much for having me. It's great to be here.
Yeah. So, I kind of started an intro about you, right? Shared a little bit of where you were before. I guess before we get into the questions, the meet itself, could you share a little bit from how did you come to here from PokerStars?
Yeah, absolutely. I was a poker player at some point, and I went to work for PokerStars and sit kind of on the other side of the table. As a poker player, I was dealing with zero-sum games where somebody kind of wins and loses at a poker table. And while working at PokerStars, I was looking at kind of the economy and how to balance economies in those zero-sum games. And so this is very, very similar in nature to miner extractable value, where a lot of bots are kind of fighting against each other to extract value from the Ethereum network and even Ethereum network users. So the parallels between the ecosystems are very strong, and I think that for me and for everybody kind of who's come into crypto from the online poker world, this notion of digital cash is very familiar, because we all would trust kind of these online casino sites with our deposits, and so the notion of a cryptocurrency or an online currency is a very familiar topic, and we can see the immediate applications of it right away. So that's kind of what originally attracted me into crypto, and into the MEV space in general. I think these kind of competitive playing fields and these competitive areas within the crypto space is just very, very interesting.
Right. So actually, you mentioned quite a lot of interesting terms, right? So we already mentioned MEV and miner network, there's all these confusing terms, right? I think to provide some context to our audience, could you help set the scene for us, explain how miners actually process transactions on the Ethereum network, and how do Ethereum miners decide which transactions to process first?
Yeah, that's a great way to begin. And so today, right now, a lot of people may not know it, but when you submit a transaction to Ethereum, a miner has to choose to include it inside of their block. And today, miners, and of course, every transaction that's included in a block, it gets processed in the order that it's included in the block. And kind of counterintuitively, it doesn't really have much to do with necessarily the gas price that you pay or anything else in terms of where your transaction gets prioritized. But usually it's based on if the miner can reorder the transaction in a certain way, do they get some value out of it? And in today's kind of ecosystem, right, and how the blocks are being formed today, there's very advanced reordering going on. And the Eden network also does some reordering and applies some reordering rules, but we do it with a user-focused intent. And so if you submit a transaction on Ethereum today with very high gas, it will probably be picked up and included in a block. But deciding where in the block it gets included is kind of like random luck at the moment for a lot of users. And so why it's important to be included kind of in the beginning of the block is that if you're trading on, say, Uniswap, and you see a market price for a token, if you get included as the first transaction in a block, you have a higher chance of executing at the intended price and at that market price. Now, if you get included later on in the block and somebody trades in that market before you, your transaction can actually fail, or it can fail to get the market price that you saw, and you can get a different price. And normally you'll get a worse price because, normally you'll get a worse price. And in the worst case scenario, your transaction fails, it costs a little bit of money and things like that. So it's very important to be kind of first in the block. Unfortunately, there's no real reliable way to always be first in the block without just, paying a ton of money. And the Eden network is definitely helping resolve that, but it's also protecting against so-called malicious MEV. And I think that we have to get into the topic and define MEV a little bit more, but MEV is any value that can be extracted by reordering transactions or censoring transactions or otherwise kind of handling transactions. And so the idea behind MEV and people taking MEV is that if you send a transaction that can be ordered in a certain way to make money, then it will be ordered in this way to make money. And a lot of hacks get the headlines around the ecosystem, right? 50 million lost here, 150 million lost there. But what's happening to traders is that these same amounts of money are actually being lost by MEV and MEV extraction techniques. So the most common MEV extraction technique is a so-called sandwich attack. And in a sandwich attack, what happens is that somebody sees your transaction in the public mempool, in the public transaction pool of Ethereum, and puts their own transaction ahead of it and another one of their own transactions behind it. And so let's say that you're on Uniswap making a trade into a token. What ends up happening in a sandwich attack is that somebody slightly increases the price on you by buying that token in front of you. You buy the token, and then that same person sells the token behind you at the slightly increased price and makes a profit. So you as a trader get a worse price execution because of MEV in this circumstance. Does that make sense?
Yeah. I mean, it's really interesting, right? I think for a lot of people, they think that, oh, I up my gas, that's the end of it. But what's actually happening is that there's also a war in the block itself, not just the different blocks, but within the block. And I think MEV is another way of putting it, is essentially like how much value or profit can you extract out of processing each block, if that is correct.
Yeah, that's exactly right. And so, today the processing and today the options for users to kind of have some agency over what happens to their transactions is possible. And the Eden network has brought some agency back to users. So the Eden network enforces block production rules and block ordering rules on its participating miners. So 40% of the hash rate has opted into the Eden network and producing blocks by these rules. And essentially, for the most users, by staking Eden, those transactions go to the front of the block or closer to the top of the block. And so this really priority block space is now kind of attainable for users without really doing much extra. So we have a custom RPC that takes trades and places the trades near the top of the block for improved execution. So users in aggregate are getting better price execution, closer to the market prices that they see on the UIs and in Uniswap, for example. And this worked with any DeFi product. It's not just one DEX that this works for. It's any DeFi product ever, any transaction ever. And so anywhere where priority is important, the Eden network has a role for users. One of the outcomes of how Eden blocks are produced is that it actually becomes very hard to sandwich attack trades. And so there's some level of MEV protection just by the nature of how these blocks are produced, because we order transactions based on stake amount, and the stake amount is determined in the previous block. So that means in order for somebody to sandwich you, right, they would have to have 2 accounts with a certain amount staked to exactly sandwich you, even if they knew about your transaction.
Yep, I completely get it. And you mentioned that this also applies to DeFi, but I assume it also applies to any protocol, right? Even, for example, NFT mints, those art block mints to get ahead of the queue.
That's exactly right. And we saw a huge amount of interest from NFT minters who realized that the Eden network gave them a significant advantage in NFT mints. And the rationale kind of behind this is that, in an NFT mint, let's say that the mint goes on for over the course of 10 blocks, and these blocks are completely filled with people minting. Well, on the very last block, the sale will sell out, and whoever is at the bottom of the block will miss out on the sale, and whoever is at the top of the block will get their transaction through or mint the NFT. So NFT traders are using the Eden network for the priority in the minting process, but even NFT projects are actually deploying their minting contracts through the Eden network RPC. And the Eden network RPC is a private RPC that takes transactions in and doesn't gossip the transactions. So it sends the transactions around to Eden miners who are effectively economically bonded with their future revenue in the Eden network. And if the miners misbehave, then there can be some slashing and punishments. And so the idea behind the private RPC is that these transactions can actually effectively be private. They're not like in the sense that we're a privacy network or cryptographically private, but they're not gossiped and they're not leaked around the ecosystem for people to pick up. So for an NFT project recently, they used the Eden RPC to do their minting contract in order to avoid a situation where people know a mint is about to come up and they buy all the tokens before anybody else has a chance to do it. So it created a very fair initial mint for this NFT, and it's a great way of showing like how private transactions can even be used outside of the usual DeFi trading.
Yeah. I mean, that's really cool. And I actually see a lot of like you mentioned, a lot of positives for this. And which brings me back to, it's quite interesting because is this the way that how we process Ethereum transactions, right? So it boils down to how the blocks are processed. Is this underlying infrastructure fixed? And do you think that this is the best way of how we process blocks? Or is there another kind of method that we can gravitate towards too?
Yeah, and from a technical standpoint, when miners are evaluating blocks, there's a couple of things that are going on. They're receiving a lot of transactions from the transaction pool. They're receiving a lot of transactions, and they're needing to produce blocks. And every time that they produce a block, they go and they check the profit against the block that they had produced originally. So the block kind of starts out empty, and then the miner fills it with transactions and checks like, is this more profitable for me or not? And then switches over to producing the new block. Now, this actual computation for producing and switching blocks becomes relatively advanced and relatively complicated and expensive in a sense. And so with kind of more and more transaction and block production, more advanced block production techniques, this computation becomes very, very expensive. And in some cases, it leads to an actually reduced hash rate for the miner. So on the Eden Geth client, we've taken a lot of steps in order to reduce this computational overhead. And what we've done with the Eden network is create an economic kind of extraction technique for value that doesn't require this kind of computational overhead. So what we end up with are kind of happier miners and more profitable miners, in part because they can choose a different method for producing their blocks. And so at a technical level, this is saving computation power on the individual miner and making a more efficient hash rate.
Well, yeah, I mean that sounds really good, right, for miners. And I think when we think about all this, there's always on the back of our minds, Ethereum 2.0 is on the way. And actually a big part of Ethereum 2.0 is the switch from proof of work to proof of stake. Will this impact Eden at all? What about other parties like validators and users?
Yeah, we're really excited about ETH 2.0, and we've been working a lot on it and a lot of planning and execution going into it. So ETH 2.0 is going to be a substantial change, and the merge, is scheduled for, sometime in Q2 of next year is what we're expecting. And so we're going to be switching away from proof of work and going to proof of stake. When we originally wrote our white paper, we used the term block producer in order to kind of distinguish the fact that, yeah, in today's ecosystem, it's miners, but in tomorrow's ecosystem, it will be validators who are producing blocks. What we expect is that MEV will continue to play an enormous role in ETH2. So the public transaction pool is still there, and users can still be affected and hurt and essentially ripped off, but by trading in the public pool. So we'll continue to offer our private transaction pool, and we'll continue to build blocks in the same way. And in fact, in ETH2, there's something called the execution engine, which really just uses ETH1 block production. It changes the consensus mechanism, of course, but it still uses the same execution engine. And so a lot of our techniques for producing blocks, a lot of the Eden Network's use cases still remain valid and relevant in an ETH2 world.
I think that's like good news, it's not really, there's no big overhaul or infrastructure wise for Eden, which sounds like good news. But then, there are some things, right, that I want to discuss on this note, because kind of a segue here, but critics have pointed out that, POS or proof of stake will disproportionately favor larger validators. And in many cases nowadays, it's actually exchanges, which could lead to censorship issues, right? Should we be concerned about this?
So yeah, and I think that what we've called it is the kingmaker effect, and what we've seen on other proof of stake networks is the kingmaker effect, which is that if a validator gets a disproportionately large share of the network, they can take a disproportionately large share of MEV, and then they keep growing, right? They become an even bigger portion of the network and things like that. The Ethereum Foundation has made an enormous amount of attempts in research getting away from this kind of issue, because fundamentally what the kingmaker effect allows for is censorship. Because if you own the entire network, you can actually stop maybe other traders from using the network, or you can stop other people from using the network. And the Ethereum Foundation is like really aligned to censorship resistance. That's really the priority. And so MEV is like sometimes called like a threat, right? An existential threat for Ethereum. And I would say that, this is why, because it leads to a kingmaker effect that leads to censorship. And so a lot of the decisions within how proof of stake and a lot of the proposals that are up right now are definitely designed to avoid censorship.
And do you believe that these concerns are valid within Eden's context? Because like you mentioned, Eden is actually about 40% of the network.
Yeah, and I think that what we should say is that, the Ethereum Foundation is definitely focused on censorship resistance. The Eden network is not focused on that. We're focused on users and users having the ability to trade in smart ways. And so when we look at kind of what censorship resistance means, it means that there's a public transaction pool where users' trades get kind of abused, right?
Yep.
And it brings some downsides. So where Ethereum has been and is correctly focusing on censorship resistance, we're trying to give users the other side of that. And part of that is certainly that in this model, we're not as focused on censorship resistance. We're more focused on the users who want better transaction execution.
Yeah, I completely get it, right? And on that note, right, because we've been talking a lot about censorship issues, and like you mentioned, it's a very pressing issue. A lot of other alt chains, L1, L2, there's always questions about the trade-offs between scalability and censorship, right? And so, like you mentioned, the Ethereum Foundation is constantly discussing this issue. And there's actually an interesting topic recently on a proposer slash builder separation technique, otherwise known as PBS. Could you explain what PBS is and whether it is a viable solution to this censorship resistance issue?
Yeah, and right now this is kind of one of the recent posts and one of the recent research posts that I was alluding to, and I think it's one of the neatest pieces that I've kind of read recently and had the pleasure of going in depth on. The split of proposer builder is essentially saying whichever validator is going to propose a block to the network can get it from a separate system or like a separate computer. And so this proposer builder split is kind of opening up the door for validators to take full blocks from different, let's say networks like the Eden network. And so we could build a full block and hand it off to a proposer, and other people could do the same. And we could, even see a future where there's kind of a marketplace for doing this. So and the reason that you would want us to kind of separate that is maybe you want to run validators on machines that don't need very much computational power, or maybe you want to run, your ETH2 validator on a Raspberry Pi or something like that. In that case, you need to kind of offload where all the computation for forming these ideal blocks goes. So the idea here is that you can separate that, and then everybody can have access to, the builders that they want to build their blocks. And the very, very interesting part about this is that there's a cryptographic guarantee that if a builder hands a block to a proposer, that proposer needs to mine it in exactly the way that the builder built it. So this helps deal with MEV stealing, which is kind of an existential threat as well, where networks like the Eden network and other kind of MEV solutions figure out some clever trade, or users of the Eden network figure out some clever trade that's going to make a lot of money, and at the end the miner kind of just censors that transaction and replaces it with their own. So it solves this problem in a really elegant way that's great for the Eden network and great for Eden network users. And so this is kind of an exciting part about it. And then in order to make that kind of censorship resistance, what's being proposed is the idea that if a user is being censored, they can go directly to the validator, hand their transactions to the validator, and the validator says, here's my list of like censorship resistant transactions. You have to include this for me to even think about considering your block. And so that means that users who are being censored have this option to go to, you know, benevolent validators, and the validators can give these criteria to the block builders to include in blocks. And so, you know, this is where we're going, where it really elegant proposer builder separation really elegantly solves MEV stealing, really elegantly solves censorship, and it leaves a lot of room for advanced block production techniques.
So from what I get, it sounds very interesting because it's basically a mediation system, right? So if I'm unhappy with the initial settlement, I take it to court, and in this case, as a second arbiter or judge. Is that
Yeah,
a good analogy? Yeah. So, you know, like you mentioned earlier, right? I think kind of diverging here again. Eden plays a big role, and a lot of it is, you know, to manage overhead costs for miners as well. And generally, that translates to higher gas costs for everyone, right? And I think that's always been a big part of Ethereum. You know, recently there's also another proposal / discussion going on, actually proposed by Vitalik, otherwise known as EIP 4488, which aims to reduce transaction costs for Ethereum rollups. Right? Could you please share what your thoughts are on this, and yeah, what are the implications?
Yeah, this is a great question, and this proposal in particular kind of sets the scene for what we're expecting next year, and maybe even in the following year. But in 2022 or 2023, we're going to start seeing rollups become the actual future. So it may be too soon today for rollups, but it's not very long until rollups are really viable. And what it kind of means is that, you know, you can take your money from Ethereum, transfer it to a rollup, do a lot of cheap trading on a rollup, and then come back to Ethereum or settle on Ethereum, you know, when you're kind of like done trading. And the idea is that you can go to a rollup, and then the rollup is going to keep track of all of this chain state, and then roll it up into one kind of elegant summary, like a receipt of all the trades that have happened over there, and bring them back to Ethereum and post them on Ethereum. So what this means for the MEV space is that rollups are going to play a really major role. Because essentially imagine that on the rollup, maybe there are like 1,000 trades, and you know, these 1,000 trades are going to affect the balances of wherever these rollups kind of land. And so if this rollup kind of lands back into a, I don't know, like Uniswap LP position, or changes balances in some important contracts or accounts, you can imagine that this is going to generate, you know, some level of significant MEV, because you have kind of the net result of all of these trades coming back and hitting the main chain, where it will cause like some serious MEV. So we're looking at it from, you know, and I'm definitely looking at it from that standpoint. But you know, ultimately, like this so-called scaling problem of high gas prices and things like that, it does need to be solved. And so if we can make rollups work, you know, as a community, and move some of this activity, I think that it's very good for Ethereum and very good for the growth of DeFi. I mean, at these gas prices, I know that a lot of new users to crypto just kind of skip Ethereum and go straight to other chains, and so rollups, you know, provide a way of kind of recapturing some of that new user flow.
Yeah, you know, so I guess the overall theme I've been getting for Eden's current state, and you know, the progress of Ethereum as a whole, is that while many tout ETH 2.0 as the, you know, the final solution, it really is not, right? I mean, it is there to improve scalability, but there are a lot of underlying issues that need to be addressed. And I guess this is where Eden comes in, right? It's protocols like Eden and proposals like PBS who contribute to the overall success. Would you say this is an accurate assessment?
Yeah, the Ethereum network is the sum of all of its pieces and all of its development teams, and I think that everybody building on Ethereum is really important, and everybody who builds on Ethereum wants to improve it. And so we've looked at it from the standpoint of how do we improve trade execution. We took a very simple challenge, and how do we avoid this kind of attack on users with the sandwiching and things like that. And all of these are because things on Ethereum were working really well and were well adopted, but then it kind of opened up this like unexpected result. And so we're here kind of working on what happened to Ethereum because of successful builders. And hopefully we can have continue to improve user experience, and have like a really meaningful proposition for users moving forward, even as Ethereum, the shape of Ethereum changes and things like that. I think it's just really important that users have many options for how to submit transactions, especially having a single option for submitting transactions just to the public mempool has just not been great. And so the Eden network kind of comes along and provides a lot more options for users.
And I guess the final question for today to round off everything is what kind of advice or takeaways you would give to participants in the Ethereum network, to help shape its success for the future?
Yeah, and
it's a big question.
I think that it's very easy. It's very easy to like lose money using Ethereum. You can lose it to hacks and other things, and so essentially everybody kind of says, what, do your own research, make sure that the protocols that you're interacting with are trustworthy and work as intended and things like that. And I think that the same thing is true for this fundamental thing of submitting transactions. So I think my advice would be to do your own research, and look into alternative ways to submit your transactions to get better results. And if everybody on Ethereum did this, or everybody on Ethereum, used all of the options that are at their disposal, we would be seeing a lot less money going into the pockets of kind of harmful MEV bot operators. And I think that the amounts of value that we're talking for users is very, very significant with very little behavioral change.
And I think that's about it. Thank you so much, Caleb, for joining us today. It was great to have you.
Thank you very much, Ben. Yeah, it's great to be here.
This podcast is provided as part of the overall information on cryptocurrency contained on our website, is for your general information only, and does not howsoever constitute any endorsement, financial or investment advice, nor any solicitation or offer of securities or other financial instruments. CoinGecko and the podcast presenter makes no warranties, implied or express, of any kind in relation to this podcast, including, without limitation, the accuracy and updatedness of its content. All opinions and recommendations therein the podcast are based on the personal opinion of the presenter. Please conduct your own research and procure professional advice should you, at your own risk, decide to howsoever invest or trade in relation to the content contained in the podcast.
For the latest crypto prices, visit our website. If you haven't already, make sure to subscribe to our YouTube channel to keep up to date on the latest crypto trends.